Hey everyone, sorry, internet crashed. So hopefully it doesn't happen again. I think my PC's also giving out as well. Thank God that didn't happen while I was trading. So I didn't miss much. Nice, yes. To be honest with you, I think my internet crashed and my PC also gave way as well. So I'm going to need to have a look at it after the stream, to be honest. See what's going on. So what's happening? Did you take any trades? When that stuff happens and the streaming stuff, makes me paranoid in case it can happen again, to be honest with you. Which is a bit annoying. So, looks like we're creating the most famous charting pattern here with the little, most obvious, shoulder, head, shoulder. I can honestly say I've never really traded them, to be honest with you. I know a lot of people do. Hey, buddy. Yep. Yeah, I need to bear with me. Bit of a nightmare that happened, to be honest with you. We'll see. I'll need to check out the status quo, shout my internet service provider, and check my PC and stuff. Nice. Yeah, that's the thing, Neil. Well done though for not steaming in. That's one thing that you should, be super proud of. You're at least waiting for the setup. And then if it doesn't happen. Tomorrow's a new day. Try not to carry over the pain. Easier said than done though, right? Okay, we've got about an hour until all the volume comes in. Well, 50 minutes to be exact. I'm just trying to think of any form of trading idea now. I mean, I know this is not really tradable to me, to be honest. I mean, best guess would be a long and basically test the highs here again, but we could also go down here. It would be the third hit of the lows. Suppose we are now creating one of these magical head and shoulder patterns as well. So we'll wait and see how it plays out, but market against now the Russell's pretty much at the highs. It wasn't, geez oh. Yeah, most probable looking like we're probably going to go higher now. Market is trying to tick up, but NQ needs to somehow break POC again. And you know what it's like, guys, they can hit size here and pull it, and before you know it, you're back down at POC again. It's difficult. Difficult for sure. Let me know if you guys get any questions, but nothing too exciting looks to be happening. Think you can break the POC, then I think we're on to potentially hit the highs. Instead of the Dow and the Russell are trying. So if we do take these highs here, and then we know that that can probably happen in the next hour, right? Do we think we're going to hit 88s? What do you guys think? We'll see. At least the spoofing, it looks to have calmed down a little bit. That's the worst I've seen it in a while, to be honest. It was a good call out, Neil. It's the worst I've seen it in a while for sure. They're not normally that blatant, to be honest with you. We did have these large sell orders here, and typically when the market likes to revisit here, you know, I suppose we have hit them here and then ticked down a little bit. No, no, it's not crashed. I'll need to see what's going on. It's making me paranoid, to be honest with you. So I'll need to look into that, man. The streaming gig's hard enough without those variables thrown in there, to be honest. I need to also check if it's putting a much, see the delay now that it's like as close as we're getting. I need to see how much of a strain, like basically, can my internet handle that, and can my PC handle it? To be honest, so I need to double check them. Yeah, not a whole lot. We're trying at the moment to see. I would like us to see at least a little bit of follow through. To be honest, one way or another. But what do you think? When are you guys thinking of entering? You just waiting to see if we get some volume in? Probably, the 10 to 4, 5 past 4 volume is when we may get some more opportunities. But looks like the market's essentially just probably going to rotate back to POC at the moment, right? You would think. It's kind of in no man's land at the minute. I need to check Treasury post stream to see where it's actually finished off, but see if we actually pull back into the day's POC. If you guys have the charts up, can you have a look and hi Scratch. I would say Sierra is miles better than Quant Tower, to be honest with you. The charting on Sierra is fantastic. It's one of the best platforms for charting. The depth of market is an order flow tools are I would say they're really good, but they're lacking a few features. I would say there's a couple of small features that Jigsaw wins with the depth of market, to be honest. Like just small quality of life things like a column text field, um, the momentum tails, easier to place your orders, just small things, to be honest with you. I suppose if you're trading treasuries, you don't really need momentum tails, do you? The fucking thing doesn't move. Momentum tail for a tick. But yeah, there's a couple of features. I would say I wouldn't say Quant Tower is one of the best. The reason being as well is Quant Tower, as far as I'm aware, is one of the lead like white labeled platforms, as far as I'm aware. So typically, when a business decides to go down the white labeling, um, they tend to offer a broader scope of products, but not as focused into one thing, if that makes sense, because they have to cater to a lot of the white labels. So that's no, that's the general and the general outline in software. It could be worse. You could be looking at Top Step X, but it's just a plug-in into TradingView. It's crazy. But that's what I would say, mate. It's got some good tools. It depends what you're after. You know, are you looking to use depth of market or you not? It really depends. I'd say the top three that people use for order flow is probably Sierra, Bookmap, and Jigsaw. Yeah, that's another thing too. What data do they use? Do you know? Do they use? Is it Rhythmic? Do you use CQG? I mean, what do they use? One of the platforms I would love to try out would be TT in Trading Technologies. I'd like to try that out, but it's just that they're not their pricing schedule is just not suited to retail at all. It would be a go-to if you're an institution, of course. And then they would need to have tons of different order types. It's not just going to be buy market and sell market. They need to have things catered to icebergs and tons of different order types in there. Yeah, if you're more interested in the depth of market, to be honest with you, um, if you're new to depth of market, I would probably check out Jigsaw. To be honest, the reason being is it's really out of the box. Sierra is a fantastic platform, but it's uh, it's not easy. Fantastic platform, but it's not really out the box. Everything you see in this screen, I had to basically build from scratch, and you can imagine how long that took. I'm telling you, it literally took me years to get these iterations of what you see on screen. So they offer, I think their main pitches so far, what I've seen is they offer a magnitude of different order types, mainly catered toward institutions. Um, and I think they offer more consolidated tapes across the board, and it's probably a little bit more of a smoother software, of course, but they're essentially only going after institutions, right? There's going to be no trading, retail with them. No one's going to pay 500 quid a month for a fucking charting platform. No one's going to do that. When you can go to Sierra and you're literally paying 5 times on TT what you'll be paying to Sierra and Jigsaw. Or Scratch, you can go to Sierra, try it out. We can give you the chart books. Here we go. There's stops triggered there. Let's see if they absorb. Oh, they're banging it now. Let's see if they pull the bid, and before we know it, we're right back in. Oh, nice. Nice. I'll need to check that out and see if it's any good, to be honest. I don't really think it comes down to the price, to be fair. I mean, what's the going rate? A guy's not expecting to be paying something like 50 to 100 bucks a month for your charting platform. Surely that's the going rate. If you're using exactly, there's a blipping, the blipping, yep. Do you see what I mean though? It like blips through price, right? And that's a classic there, where you see they take the stops, they absorb, and then they start hitting in, and ultimately you want the bid to be pulled as well. You need to be really quick with it, right? And when you're doing these types of trades, you're either going to be bang on the money and it's going to be painless and you're correct and you're out for 15 ticks, or you're going to get run over. And that's the thing. It's no other way about it. So you basically need to step up, put your balls on the table, and basically hit into the bid here when the institutions and large firms are doing it, and then you're out for 15 and it's painless. But there is going to be a time there where you hit into the bid and then they just continue to the left, and then you're like, oh shit. What package would you need? So you can get away with package 11. I suppose the question is, the other thing as well you need to consider is your data provider. So do you trade your own personal account Scratch, or do you trade prop, or what's your setup? Ah, it's a mighty, mighty stop run there, isn't it? I kind of hate that term. I feel like ICT's ruined it. Yes, just. It sure is, because you've got the three TPOs. Anything more than two is considered excess, which means it's a finished auction. But this is the thing, the best trades um, tend to be the ones that aggressively hit into levels like this. In my experience, see when the market does this and it just grinds up, this is when you're going to struggle to be fading because it just never ends. The trades tend to play it better from my experience when they bang it like this, you know. But as I said, you're going to get run over with this. You just need to make sure that you're taking enough from them, to be honest. All right, nice. So you're with AMP. You'll be if you're with AMP, then you'll be able to trade via Sierra. Uh, I think they might be using the Teton protocol with Sierra. Otherwise, you can just get Denali with them. My advice would probably be, if you're using Sierra, is to get Denali data feed. It's very good. We were discussing that in the Discord last night about which platform, which like data platform Sierra's white labeled, because obviously not their own. They've just called it Denali, and I don't know, probably API'd in from somewhere else, because it's not going to be their own data feed, right? Neil. Oh man. Well, at least did you sell into that there, right? Well, the thing is, Goose, you're never going to know about the spoofing unless you've got MBO data. You know what I mean? Because I suppose you can see it, but it's not as obvious. It's not as obvious. I would say really important in treasuries, because you can see the large orders that are in an individual order type, and the market tends to really respect them when they're like, you know, a few thousand a clip in 10 year. There's been an extreme amount of spoofing right now, or at least in the last couple of hours, in ES, which is really uncommon, to be honest with you. But I just like to see it, to be honest with you. And I think to be honest, for MBO data, I don't know, man, it's like an extra $15 a month or something. It's not expensive. 314 candle. Yeah, mine's in the wrong time. That would be like 8:14. So you caught the nice sweep of the highs then. But yeah, Scratch, I would say Sierra and Amp are quite good friends. I think they work quite well together. There's this 223. Let's see if this one's at least going to be real. I think now if they get 4 or 5 ticks away from it, they're probably going to pull it now. Pulled again. Classic. Let's see if they pull this one. Let's clear it. And actually, that one was real. Okay. There's the Spoof King, Mr. 200 Law, we'll call him. He's at it again. Maybe Nab's out of jail. He's at it again. Honestly. Let's see. Surely to goodness he's gonna have one of these orders that are real, right? No, of course not. Of course. Fuck me. This has been the worst case of spoofing I've seen in a long time. Wouldn't it be interesting though to just go on to the order book here, right, and just flash 500s all the way down, and then you actually sell and you flash 500s on the bid when you're on the offer, and then you just pull them. Ah, God, you get the popcorn out. It would be great. Yeah, exactly. You're right. It's like 1 of 4. Like, yeah, yeah. It's probably a 20% hit ratio for them actually pulling today. To be honest, sorry, they're pulling about 80% of them today, which is crazy. But if you didn't have the MBO data, it'd be harder to spot. I think still spot them, of course, but it's not as obvious. You wonder though why they're doing it so close to price though. You know, it's weird. So, so we're gonna pop this in the chat, seeing as the last stream died, just in case anyone wants to support the channel. Big shout out to Avi, who's ever's in the chat. We've got Avi and Goose that are part of the coffee gang. Excuse me if I missed anyone else. But yeah, I've got 20 minutes and counting till we see the actual flow start to come in. You noticed here though that the market just made a higher high as well, but Delta is absolutely nowhere near it as well. Well, yeah, it still made a high, but Delta was nowhere near it. What makes you see that, Manny, just after all the heavy data points coming out? I'm anticipating a big correction coming, to be honest. I say that a lot though, and then we just continually pound highs, to be honest with you. Need to see what FOMC brings. I think the days leading up to that we'll probably just see more balance, to be honest with you. Yeah, all eyes on Wednesday this week. I might not get to bed on Wednesday. So it's looking like we're wanting to go lower at the minute, but really anything can happen, to be honest. Yeah, all the data's coming out. Yeah, exactly. Exactly. I tend to find that like the couple of days prior to big data points that come out, the market typically just reverts back to a rough mean. Um, and then whatever which way happens, we're going to just see the market go bananas, aren't we? If you do you remember the last FOMC, I think, where the market went just parabolic on basically no news, nothing hawkish was said at all to support the stock market. And as soon as Powell stopped speaking, it absolutely dumped, and it literally just taken souls both ways and ended back where it was. It's just a classic. It's like a textbook, setup. How do you do that? Yeah, exactly, Neil. I mean, I'm not entirely too sure which way we can go here. There's a lot of value to the downside created now. We've pretty much got POC and all the volume carried out here. But is this the right time though? Where the market's just going to be smashing the high of the day, and then up here it seems little unlikely. I think the most, you know, I mean, let's see what you guys think. Do you think we're going to consolidate around here? Do you think we're going to smash the highs, or do you think we are going to, tackle the lows? What do you guys think? Just as a general consensus. At the end of the day, it's a guess, but just interesting to see what you guys think. Yeah, this one's weird. It's been 200 lots as well. It's definitely the same firm that's doing it. Neil, we should start a class action lawsuit. We should just send them the streams and just say, guys, how can you explain these order types? Here's 20 spoofs in the space of 5 minutes, and you guys are saying that you regulate this, you know? And it's not going to be very hard to spot that, to be honest, because you can just figure out who's hit the book 200 lots multiple times on the bid and offer, you know? Yeah, exactly. We get assassinated. We probably would. Here we go. Here's the Dumperoo back into POC. Come on, can we see some? We want to see some action, you know, so we can get the pom poms out. Let's get them to like spoof the world, do something. Did anyone actually ever look at the tape or anything with Nav when the guy was spoofing? Did anyone ever bring up the tape for that? Like, how aggressive was it? Because it'd be interesting to see if it was so obvious it was crazy. Like, was he getting in and flashing like 1,000 lots in every price or something? Like, what was he doing? Does anyone know? It'd be really interesting to actually see comparatively to like how he got done for spoofing versus what's actually happening, on the stream. But yeah, you're right, Jackson. I think with the always when the elections are happening, the Fed basically says, hey, we'll help you. You better believe they're probably. Because here's another thing too: the guys that run the Fed are basically ex-Goldman people, ex-JP Morgan and ex-Goldman dudes. So they're bound to have their senior colleagues they've known for years that will basically give them a little tip off, right? Not tell me that's not happening. Oh wait, what? So he was. You're kidding, man. He was hitting 3,500 lots spoofed. Right. I mean, that's no wonder the market went nuts. Jeez, oh. That's crazy. Oh, is there a book? Is there? I need to read that. I've watched the documentary and stuff, but 3,500 lots while he's chilling in his bedroom or chilling in Futek's office. That's madness. 3,500. What the hell? Fucking hell. And what was he? Was he doing it across? Did it tell you that the bids and offers he was doing it on, or was he hitting them across? Was it like across multiple prices? But you can imagine how that's going to make the algorithm spaz out. Yeah, but this is what I'm thinking. I think we're probably looking like. I mean, the most unlikely option to me seems smashing the highs. To be honest, I think there's more downside and consolidation than smashing the highs. It just doesn't really make much sense. Considering again with the bell curve theory that there's no data, you know, and as well the fact that we've got a divergence in delta. So you need to be, delta would need to be smashing the highs. Everything, all the correlations need to be going. It just doesn't seem like the right context for me for this to be smashing the highs, to be honest. He'd make a nine. He'd make 1 million. That's crazy, isn't it? But to be fair, it's basically a cheat code, isn't it? Right? I mean, it's in essence a cheat code. You're basically saying, right, I'm going to sell, and then I'm just going to absolutely load the prices with spoofs or whatever which way you want to do it, depending on. It would just be a great experiment to see, how the market responds to those large orders. And that's probably what these firms are doing. When you actually think about it, if you're like, right, let me see how aggressive these sellers actually are. So I'm going to hit 200 here as a feeler, and then see if they take me. See if they take my whole order. Because if they don't take it, then they're not that strong, are they? Do you know what I mean? As an example. Like, that could be the reason as well. Because when you've got thousands and thousands of contracts at your disposal, what's 200? Do you know what I mean? Like that's like us trading a micro, for example. You know what I mean? So that could be the general idea as well. Let me put this out and see if they aggressively take me. If they do, then I know that they're continuing or so on. Could be many ways they could be doing it. The trouble is, we've got no idea. Only they would know. The only way we're going to find out is if someone, leaves market making and basically goes in a dark room and, hides their voice and sits in the dark and talks about it. And some sort of reporter does it, like a leak. It's the only way I can see us getting to know. Wow. TT wrote him an algo. Jesus, really? I thought he did it himself. So what? TT was complicit in that? You're kidding, right? Surely not. There's no danger you could phone up TT and be like, "Hey, dudes, right? Can you write me an algorithm that spoofs 3,500 contracts?" I don't know if I buy that part. There's no danger someone would be like, "Ah, right, sounds no problem." That doesn't seem a very good commercial decision, does it? I don't know. They could have, but I'm with you though. I'm with you. It would be a really interesting experiment to just see how the market responds, and I think that's why they're doing it. Is they're just getting a feel for, are these, are the offers real? Are the bids real around me? What's going on? Are they going to take my offer? Do you know what I mean? Because the theory could be, if you put out a spoof on the bids, right, and you've got thousands of contracts to trade, so 200 is not a lot, and you flash it and sellers instantly gobble it, you would then know that they're hungry to basically hit into the bid. But if you flash it and they don't really take it, or do you know what I mean? That could be one way, or it could be they're trying to uh, they're in essence already short and they're essentially trying to squeeze out another couple of ticks out of their position. Yeah, exactly. Yeah, I highly doubt TT would have done that. To be honest with you, I mean, if he did, then jeez, oh, it just seems highly unlikely a firm that deals with institutions that knows about that. That's my only thing. It's like, it's kind of like going to a bank and asking them, "Look, can you launder money for me?" type of thing. Oh, really? Wow, it's interesting. Interesting. Is there anything that's a wee bit more Jatet? That's the guy. Oh wow, really? Is there any like sources on this where like actual proper documentaries, not just some one you see on YouTube where they're making it out? They don't really understand trading. They're just making it out and pitching it to the public. Is there one that's like a little bit more specific around trading? It seems like you've done your research, Manny. I like your style. I know. All I can tell you is it would be really interesting to do it. That's for sure. More as an experiment, right? Because these guys are doing it all the time. And if you notice though, they pop out this is the standard. They have they lay these 50s out. It's always 50s. You know, they always lay these out. Same here. And that's the standard, but the 200s have been flashing multiple times. It's been weird. Yeah, can you ping me that book, Manny, or is it on um like Amazon or something? Oh, there's a podcast on Chat with Traders. Okay, that Aaron did tend to ask quite good questions, so that would be interesting. I've watched the documentary. I thought the documentary was like it was entertaining, but it's not catered to trading people. It's catered to like John and Jane that just want to see how a dude ripped off banks or something. Do you know what I mean? Because you can imagine on a day like today, right, when the bidding offer is pretty weak and this just to me just looks like a market maker's just lifting the price up, getting fills, taking some profit, getting filled in the offer, pulling their bids back down to here, doing the same, pulling the offer. Do you know what I mean? It's just an elastic band for what they're doing, you know. And sadly, we've got a rough idea what they're doing, but anytime you would try and anticipate that, you would get smashed. It's always the same. You're damned if you do and damned if you don't. But yeah, I'll definitely check that out. If anyone's got the link to the Chat with Trader podcast, if you could ping it to me. That would be great. Is it actually with Nav himself? If it is, great. Yeah, it's been a pretty interesting chat. So thanks for all the information, guys. I think when you watch the Dom enough and you've watched it for years, you can see the type of spooky behavior that these firms are getting up to. As we discussed in I think it was the other stream. I think it was on Friday when we just removed all the stuff from the chart. In my opinion, if you're only trading off candlesticks, I don't know how to do it. It feels extremely naked to me if you're just trading off candlesticks solely, right? Thanks, buddy. I appreciate that. Edge Financial Technologies. This was the firm. The book is called Flash Crash Trader. Ah, right. Is that not that's the dude that was interviewed in the documentary, isn't it? Who basically knew Nav. The craziest thing was that the guy Nav invested in scams. I mean, has he lost the plot? How you can take that much money out of the market and not, I don't know, just seemed a bit like a trading whiz and not really commercially savvy at all, right? Because I can tell you one thing, boys. If I was making 1 million a day, I certainly wouldn't be in a townhouse in Hounslow or whatever. I'd be in the Bahamas. I'm pretty sure you guys would too. Okay, we're continually hitting into the bid at the moment, and they don't seem to be letting off in the offer right now. They're continually hitting. So we are just at the POC for the regular trading hours, and this is the one that's including the overnight session. Nice one, Neil. Suppose if you've got a big family, you'd want to bless them all, right? Totally. At the end of the day, we're all doing this to, to make money. I think that trading is it's a pretty lonely gig. So I think the more that we can help each other out and have a community together, where if you have a shit day, you can talk about it. Because I can tell you one thing: I've had many fucking shit days in my time in trading. Times you feel like a dick, but they happen. As long as you get back on the horse and come back the next day and try not to steam too much. And I think if anyone has not done this, I've said this before, but set hard stops with your broker or your platform you're using, because if you go on tilt mode, you just pulled that offer there. Let's see if they're going to pull this one. Surely not. No, I agree. You'd want to do some greater good with it, right? Because there comes a point when you've got too much money. I mean, what can you do with it? Do you know? The amount of money and stuff that some of the richest people in the world have. I mean, you can only spend so much. That's the thing. It goes a much more long way. You'd want to make a difference in someone's life than actually just buying a new car. It's cool to have treat yourself and have something. But these dudes have like 10 and 15 cars and stuff. It's just ridiculous. They only drive one at a time. Saying that, actually, I think some of the stuff that Mr. Beast does is really cool. I think he's got a really powerful movement, the guy, and at least gets good content and actually trying to make a bit of a difference in the world. I think that's the right aspect to have. We are trading this here out a little bit. It's not been the instant, down to this sort of level, then reverse back up Vortex. The offer has been holding strong a little bit, which is different. Let's see, they're getting filled out here. This is looking like a wow. I was about to say this looks like it's going to drop. See, there's the tick back up that you see. Again, the bid was just pulled. Of course, there's the volume, and it's 10 to 4 in US time, so corresponds to the bid being pulled and some size going down there. Nice one. Wonder if they're just continuing to lift the offer now that they've done that. They're looking like a choppy chop to finish off here. We've got 15 minutes to try and bang it somewhere. So the offer was holding strong. Let's see if they can hold above POC. And if they can continually hit into the bids. There's a little bit of positive delta coming in. But yeah, the chopperoo seems like the play at the minute. But I would like to see us at least to go and probe the lows. I mean, it'll be the third time I've hit it, so we'll see how it pans out. Don't really see any massive trading opportunities just yet, considering around POC. How far away are we from smack bang in the bell curve? We'll see. We really traded this area out now. It's basically just at Friday's POC. Where are you guys all from in the chat? I've actually asked you that before. Let me know where you guys are from. Like a city and country or something. Yeah, I've opened positions before, mate. I mean, what do you want me just to take positions for the sake of taking positions or something, or? California, Canada, nice one. Yeah, I mean, I would take positions if there's something there. Missed opportunity at the highs. It's hard to chat and entertain and really focus on a dom at the same time, to be honest with you. But the one that we discussed before was the sweep of the highs here, and then essentially it sold off. We were discussing the sweep back into value. But as of right now, there is nothing here. So, so I would say that managing positions side of things, from my end, when the VIX is this low in general, or just the behaviour of how the market is, you're just not getting, 50, 60 ticks in a smooth run. We're seeing the Russell drop down at the moment. So the Russell's going. So let's see if NQ can follow, and then we should see a little bit of a sell-off here because Russell is going. But typically from my end, you're looking at something like 10 to 15 ticks. If you get more than that, then great. But the conditions at the moment is you're not getting 20, 30 ticks a lot of the time. That's those trades you're getting it maybe once a week if you're lucky, to be honest. with the current conditions, especially with it being a summer as well. So I would typically just take my take my 10 to 15 ticks on yes and just be done. And the times that you lose out on your going the 20, 30, whatever, so be it. Because the times where if you sold this, for example, and then you're down, it's down the guts of 6, 7 ticks, then you're back at entry. That happens so much in the ES. Oh, nice. Happy. Dimitri from Tel Aviv. Nice. Nice. So we've got a nice diverse bunch in here. That's what I like to see. So if we look at that, the bid, let's see how we see it now. Let's see if we're going to see buyers aggressively lift into the offer here. It's not been the smoothest hit up though. They are trading some size to get through the offer though. It's not like the offer's been pulled. If you guys noticed that, the full few hundred is trading. And we're going to clear the DOMs because in the next 2 minutes we're going to see the ridiculous volume. I'll go 5 minutes so it'll come in. But I do it on occasion. I wouldn't say it's a massive staple. It's not like when I get into a positive trade, I ultimately think, right, let me add. I wouldn't say I do that very frequently. I'm more of an all in, all out type person. The reason being is if you start scaling in, scaling out to positions, typically what traders do is they'll scale out their winners but take a full loss in their losers, and it skews their R returns. So it's better to just work out your full clip that you want to go in at, and then take your loss and take your wins, pretty much. But I'm not saying I don't ever add to a winning position, because I do. And if I plan to scale into a position, just look at the volume it's going now. Wow. If I'm scaling into a position, it must be already pre-planned. I don't just get into position and then DCA for the sake of it. It has to be already planned. Like, if I was to do that, I'd maybe enter a third of my clip to start of my full size, is what I would do. But yeah, most often than not, it's basically my full clip in and out, typically. Yeah, exactly. And when you're watching the depth of market and how everything is flowing, you get screen time. This is the thing, is where um, courses and stuff like give you an idea on the strategies and things, but it's really experience. It comes down to it. Like, what does the market do before FOMC? You know, how do you play it on certain days when the bid and offer is weak? How do correlations play into things in general, and how does that actually implement Do you know what I mean? A lot of that is just screen time and it's discretion. That you only gain that knowledge by spending the time and looking at the charts, the depth of market yourself. Because if you sat and watched a candlestick chart from now to 4 years, 4 years in time, you're probably not going to know any different because you don't retain anything. The candlestick just goes up and down. You don't learn anything. You've got no idea when looking at a candlestick how the market actually moved. Did it move the true size? Was there not a lot of volume? Or in order for the candle to make that, was the bid or offer pulled? It makes a massive difference. Massive. To how the market actually got there. If you're cracking the highs, the offer is pulled, right? And there's not really been that much volume to get there, then as soon as actually someone starts hitting into the bid with size, it'll probably collapse. Just as an example. Whereas if you get to the highs and the buyers have been extremely aggressive to take it there, and it's really like a one-sided train, you're not going to fade that, are you? But you only learn that with actually looking at the depth of market and gaining experience in it. Yeah, exactly. I did that as well at the start. You end up putting moving averages and stuff in your charts and MACDs and RSIs and all that sort of stuff. The only indicators that I use now is indicators that are relative to volume because I want to know where is the most money been spent in essence. Um, and then TPO charts or market profile just because I like to view the market in that context. And then I use cumulative delta that just lets me see at the time of the day and for the session so far who's been the most aggressive. Is it buyers or sellers? Are we positive delta or are we negative delta? And then very simply, if you see the market's extremely one-sided in delta, so for example we're plus 10k, but for the day we're not really that bad, are we? Do you know what I mean? So it means that just in general there's been quite a lot of absorption on the offer. So when you're going into your trading day, you should just be thinking of these things like, right, are we in yesterday's value area, or have we opened above it? What happened in the overnight session? Was the overnight session net short or net long? You know, how is delta been? Is there any data points coming out? What happens when in the market typically before large data comes out? You know, these types of things. So you should be doing your rough pre-market, drawing out your sort of key levels that you're looking to do business, because everyone needs to be doing that. Just because we look at depth of market doesn't mean we're gods. You still need to have your levels that you look to do business, because the reality is that the majority of stuff you see on a candlestick chart, it's just not tradable. Just not. So you need to draw up your areas, understand the day type, the context, and where you are in the market, what's happened so far in the day, and whereabouts is the general buying selling flow happening, how thick is the book for that day, and then when the market gets to your specific level and you've got a feel for it, then you execute and manage your risk accordingly. And if you lose, you lose. You know, you only need to be right. It depends on your R return, right? But you only need to be right 50% of the time with a slightly higher than 1-to-1 risk to reward, or just above 1-to-1 or 1-to-1 and be right 60 to 70% of the time. You do that and you trade a few times a day, you're done. Just in the numbers. And if you're not journaling your positions and trades, then you're struggling. You're spending an hour with your own journal and your own data, and the more data you build is going to be far more powerful than, I don't know, watching majority of stuff on YouTube, to be honest. And this channel is mainly to try and help you implement order flow and just to change your perspective. If you notice, I don't. If I'm to show you right, I draw a rectangle here, and then when the price comes up to the rectangle, you look for absorption, then just hit into the bid. It's not as simple as that, because it's the same thing as why every fair value gap, if you took every one, you would lose money, for example. It's the same sort of idea. Not that I'm advocating anyone trade that nonsense, but it's the same sort of concept. It just becomes discretion and experience, like anything. So this is my 10th year letters, um, and it took me years to be profitable. I first started off like everyone else, just I don't know, on MetaTrader, um, trying different strategies and so on. And until I actually incorporated OrderFlow years ago, um, was what made the massive change. And another couple of things as well is it depends what for me as a person. I've always never had a problem putting up green days, right? Always put up green days. But for me, the downside was that I would end up giving away a lot of those green days with one bad day, right? Um, Not saying my risk to reward or anything has ever been skewed, but I just tend to go on tilt more. So I did things like limit my max position size that I can have open at any time, limit the number of trades I can have open at any given time, um, have absolute hard stops with my broker for the amount I can lose per day. And if it's on broker side, it means that if I lose it, I'm done. I can't go in and edit it or change it or do whatever, you know, those types of things. And until I implemented that, because you're your own worst enemy. That's the thing. When you're having a shit day and you're nailing buttons, you know, um, you're going to do your arson. That's just the way it is. And you need to limit that very simply, because you can, when you get into that zone and you start nailing buttons, you are so far away from your regular trading game. It's not even funny. You would never take that, but you're in this zone where you need to try and get the money back. And that's where when you're in that, it's almost going to be better if you just hit your hard stop. Seriously. Because if you can't trade anymore on that day, you'll go and probably, I don't know, go a walk, have a beer, whatever, and, forget about how you've been a dope that day. Do you know what I mean? But these are the types of things you need to be thinking about. Because as you guys probably know, I mean, it depends where you are in your trading journey, but, do you tend to have more losing days and then have bigger winning days, or do you tend to have plenty of green days and then you have one diabolical red day that undoes a lot of work? You just need to factor it all in. That's a bit of a rant, but hopefully that made sense. Exactly, Neil. Exactly. And I would say, man, put in some hard stops as well, because I've been there, man, when you're thinking I've been there when I've just ferociously been buying and selling and been stopping out, and then you just end up doing everything wrong. That's the thing, and you need to put controls in place to stop yourself being a potato. Seriously, because when you're in the potato mode, it's hard to get out of it, man. It's hard to step away. That's the thing. So you need to put controls in place. And the difference is with institutions and large prop desks, they will literally have a risk manager that will be walking over to them and dragging them by the scruff of the neck and saying, "Get out, fuck off for the day, calm yourself, get out, you're not trading anymore." Whereas when you're at home and you're executing, you rely on everything yourself. Do you know what I mean? So I'd advocate doing something like that, mate. Take your average losing day, average winning day, and try not to make sure that when you lose, you're not losing more than your average winning day, because then you're not setting yourself back so much. I'm certainly going on a rant here, but what are you thinking, Avi, in terms of the risk model? What are you thinking? Yeah, exactly, Neil. And honestly, I've been through that exact issue so many times, and the only way it stopped it was just setting the hard limits, to be honest. And if I'm up in the day, I have a rule where um, I am not to. I can't turn a winning day into a losing day, to be honest. Where I then reduce my size effectively. And that's generally it, man. Because I was the same. Well, it depends, Avi, what you're. I don't know if you can code that in. I've tried that global profit management. The trouble with that is it's better to set it with your broker directly, or if you're trading prop, set it with our Trader Pro. Um, because seriously, if you're in tilt mode and you're on Sierra and it's set on Sierra's side, you'll just go in and edit it. Seriously, I've done that before. So you need to set it on the broker's end so that they're there to help you, right? Your broker in futures is not against you because if you end up doing your arse and losing all your money, they're not going to make any more money off you. They want you to continually burn and churn all the time so they get more money. They don't want you to go and lose all their money to Citadel. You know, Vader, how's it going, buddy boy? I've been ranting for the last 10. And also the stream crashed earlier, so thank goodness we've not crashed again. Touch wood, that doesn't happen again. Sarah chart recommends not using what trader? What, our Trader Pro or the global profit management, or what are you meaning? Yeah, exactly, and that's the thing. And you need to really, first things first, right? Is you need to have a decent trade sample. Couple hundred trades at least, right? If you're scalping, should be no problem to get that, and then you can work on your numbers. You can determine how you're doing. Are you winning, losing? What's going on? How's your max adverse excursion, your max favorable excursion? How is that? How are they working out for you? What's your average winning day? What's your average losing day? These types of things, man. Well, this is the thing, Neil, is for me, I try not to keep my rules really rigid. Not saying your rules are rigid, but I'm just saying that um, I try not to keep them extremely rigid because I don't want to beat myself up, pretty much, you know. Um, and if you take a managed loss, the number one thing that I always say to myself is there is absolutely nothing wrong with taking a managed loss because over a trade sample, the next 2 to 3 trades literally is meaningless over the next 100 to 200 trade sample, right? Or 1,000 trade sample, whatever the case is. Try and do it in 100 trade samples. The next trade is meaningless. So it doesn't matter if you win or lose. If you take a loss, then no problem. That's just the way it is. It's almost better if you know you're not, if you know your sort of trade is kind of going a bit iffy, right? And you've already got your stop in and you've accepted the risk. It's almost better to potentially just to walk away and just let it play out, until you're cool with it. been able to, because if you ever have a tendency to move your stop, that's where it kills you, you know. Ah, right, okay. Yeah, the global profit manager, to be honest, trader is not great. Despite Sierra putting it out and meant to be quite good, it's not very efficient, to be honest with you. I've used it before. I've just set things directly with the data provider or with the broker. Because you can tell them this is the max amount I want to lose a day. This is the amount of trades I want to execute in a day. Um, and you're not executing any more until that, and you know, if I hit those limits. Nice. Yeah, it's good that you can trend trade. I typically suck trend trading. Yes, it sure did. Sure did, bike boy. We're literally right back at POC. Look at that. Consolidation right at the regular trading hours POC. Classic. Textbook stuff. Uh, Vader, yes, I do. And if I make my money on treasuries, then I don't even bother going to ES, to be honest. Because if I make money in treasuries, it's a great, smooth, easy, simple day. And the thing is, if you're trading treasuries, you're just not going to do your arson, very simply. Like, it's hard to have an you'd basically need to be buying the wrong side of a breakout all day on treasuries, and it's kind of obvious because treasuries, as we spoke about, doesn't have the aggressive, doesn't take the levels aggressively. I actually don't mind Invader, to be honest. The slow days like that, um, where I'm just simply looking to fade the extremes. If they give me that day, then I'll just look to fade the extremes, and then if it does hit the lows and I take a stop out, I should have already made some, to be honest with you. So I don't mind. I don't mind them, to be honest. I much prefer the days when it hits a pressure point, breaks a low, the bid is pulled, for example, and it continually takes the next price. So that's good as well. It's easier, so it's painful. How many trades do you take if it gets stopped out? So I typically have like a three trade. So my max consecutive loss, to be honest, on a given week is never more than three. Um, if I take more than three stop outs in a row, I need to go. I need to go and cool down. Yeah, I'm starting to curse the world if that happens. Because the thing is, when you've got your specific levels, first things first, right? If I'm trying to use an example is where I would take a few stop outs. This would be the prime example. Let me see. So the market gets up to this level, right? I hit into the bids aggressively. I then get stopped out. Maybe my stop was too tight. I had it at 10 ticks, right? So I take a stop. The market goes up. I see more absorption, right? And then I hit into the bid again. And now I need to then try and take a further pullback, to maybe the breakout area or next inflection point. So I now need to at least take 20 ticks in this position to at least make it worthwhile. And if I take another stop out again, then I really need to start contemplating. But if I take three on the dot, I'm clearly not on the. This is not working anymore. Do you know what I mean? So I never really want to give more than 30, 40 ticks, to be honest with you. On a position retrying. If it's more than that, then I need to go in a cold shower or something. Neil, been there, mate. Shut off your PC. Shut off your PC. Seriously. Oh, you're a trend trader, are you? Nice. Uh, I don't know. Breakouts fail so often. I take it. For me, it makes more sense if you're like buying the break and retest. So, I mean, where's an example of that here? Market broke, retest here, then you bid. That type of idea. But for me, when you're say you're buying breakouts, this sucks. If you buy these breakouts and you try and take 20, 30 ticks from it, you're in these market conditions, the way ES trades, no chance. When you're doing this, you're literally just giving money to market makers, in my opinion. If you're buying these breakouts, this, in my opinion, like you're hitting here, say you're going long here, this works better in treasuries um, than it does in ES, in my opinion. But treasuries, you need to have telltale signs. When the market goes up here, the offer needs to be pulled, and then when they bang it, the offer still needs to be continually pulled, and size is reloading. You know, so it's not as easy to spot on ES because they will absorb across 3-4 ticks, and then you're struggling. But on a good example of it, we need to do a video on it. But a good example of it on the recent video with treasuries um, is instead of that huge order absorbing, that order's just not there. And it'll take the next price, and then the bid will then continually reload. It'll take it, then 2000 appears, and then it'll take the next one, and then 2000 appears, for example. So it's just different. You don't get to see that on ES. So buying breakouts, in my opinion, is quite challenging. Savvy, there is something to say about the number 3. Same for me. Yeah, exactly. I know why I picked 3. Just everything happens. 3 is just a thing. If I take 3 stop outs, that's normally my max. And then if I cool off, I'll normally my stats suggest I win the next trade. And then once you've taken 3 stop outs, you're better just to try and get a winning trade under your belt to make yourself feel a bit better. Stu, you 23 trades stop in one like not consecutively, right? Or I mean, how many trades are you taking in a day? That seems a lot. Is your are you trading micros? Are you trading minis? Because your commission bill must be like a couple $100 a day at that rate, man. Yeah, your commission bill must be approaching the 150, 200 quid a day. Yeah. Yeah, no, exactly. I think you've got two main things when you're looking to fade. You know, you can take the aggressive one, and then you've got a painless trade. You're going to run the risk of getting run over, or you can wait until they go back into the sort of breakout area. So, for example, um, like let me draw this line here. So the aggressive one is the one I suggested. So you bang it, hit the bid, your stop's above there, you're going to get run over at times, right? But then you're literally out here, probably for the guts of 20 ticks. You could wait until this fails, closes back in here, then take your short, and then you need to potentially have a slightly wider stop because the market can easily go back up here. But then you're looking to target back to POC as an example. That's probably the more conservative route to take because you're not going to run the risk of being run over. Like I'm saying, you're going to take some more stop outs when you're doing this, but when you hit it, um, it's more of a painless trade. It just depends on your risk appetite. If you're controlling your risk, it doesn't really matter, I suppose. Oh, you trade minis. Okay, okay. So if you're trading ES, do you? Is that normal for you, Stu, or is that just a bad day? Or how are you thinking? Oh, okay, okay. Are you up 375 net, or is that pre-commissions? So you're saying, for example, move long, hyper scalper. Yeah, I mean that's good stats, man. Your risk to reward must be in good shape. Yeah, exactly, man. Exactly. I think ultimately you need the large firms to basically give you. They need to. It's like poker, right? I don't know if you guys have played poker, but you basically need to wait until you're at an advantage in order for you to basically bet, right? And that's the beauty about trading is a lot of people don't even know what they're looking for before betting. So ultimately you need to wait for the best setup and from our end because we're utilizing the depth of market, we need to be waiting until these large firms give us an indication as to where they're going. And that can be done by, they sweep a high, then they absorb, and then they start hitting into the bid, you know, and then that can be your sign to get in, for example. So I would say the minimum trade sample you should be using is about 30. But I think you should be doing it. It depends how This is the thing. It depends on your trade frequency, man. If you're only taking like one trade a day, then by all means 30. If you're taking more than one trade a day, I'd probably go with the guts of 100. So probably a month's worth of trades, and then you can have a look at it and see. It depends on your trade frequency. If it's Stu and how frequently he's trading, I would probably say 300 to be honest, with how frequently you're trading. Because you look to be trading, I know, is that your average days, Stu? So you're like 30, 40 trades a day or something? Yeah, exactly. I mean, 100 is going to be your best idea. So you've got 100 trades, you check your profit factor, you look at your R multiples. I wouldn't be so I wouldn't be so fixed on risk to reward. Obviously, it can't be ridiculously skewed. But I would focus on, your average losing days, your average winning days, basically how many ticks it goes against you before it's a winner. So your max adverse, and then how many ticks it goes for you when you've in your winning trades, so your max favorable. Um, Look at then, do you make more money in the regular trading hours or pre-market? What days of the week? And also make a note on those days with what was the data that was coming out the next day, because you'll tend to find that the market consolidates and balances before large data prints, typically. And the reason being for that is fairly obvious because no one wants to really pick a direction because they know the market can go haywire the next day. So all that really happens is they're creating volatility for that day, but then by the time it comes to close of play, nothing is actually carried over to the next session. It's just speculation for that day. They're just filling out client orders or creating liquidity. Vader, not mm, uh, not really. No, I prefer to be all in and all out. To be honest, I'll sometimes scale out of positions. Um, Depending, I would say I would on ES never, never would I scale out in ES. Treasuries sometimes because if I've got 10 or 15 contracts on the 10 year, I'll look to scale out some after a couple of ticks, and so on and so forth. Would be more inclined to do that. But the one thing that I would say with scaling is people that scale out, they need to be really cautious that they end up scaling out of winning positions and not taking the full amount, and then they end up not scaling out of their losers, and then not making enough in the winners, simply. Because it really falls into two brackets. You're in the 45 to 50% range, maybe even 40 to 50% with a, you know, 1.5 to 2 to 1 uh, R multiple that you're going for. And then once you're above the 50% in the sort of 60 to 70, you're kind of in the sort of zero point 0.9 to, maybe 1.1, 1.2 at a push return. So that's typically the way traders fall into it. Yeah, exactly. I mean, that's my main concern. Because the trouble is, majority of people are hardwired that when you get the money in front of you, you take it. So if you start scaling in, you'll basically scale it every single tick. You know what I mean? But then I guarantee, if you're 5, 6 ticks against you on ES, you're 15. You're not going to be scaling in the way you know what I mean? No one does that. No one scales out of a losing position. Do you know what I mean? No one does that. Scale out a winner. It just doesn't make any sense. Just keep it simple, man. There's no real, in my opinion, there's no, the market's complicated enough. There's no reason to start complicated. Just work out the risk you want to take in a trade. You take it, and I think with scalping, to be honest, like, don't be afraid to scratch. There's no point. I see a lot of new traders do this where, they say, I've taken a trade, and okay, I cannot exit this trade unless I get a minimum of 1 to 1. If you get into the trade and it's not doing what you expect, just scratch the damn thing. You can always get in again. It costs you $4 or something. Do you know what I mean? There's no point taking a 15 tick stop or whatever on ES if you can just scratch the thing. Do you know what I mean? Or take a couple of ticks or whatever. Like, seriously. A lot of people mistake with that. A lot, man. Where they think, I'm not going to take the 5, 6 ticks here because. Do you know what I mean? As an example for this, right? Say you were selling and the market gets down to POC, right? Let's not say why you're selling into POC, but anyway, say the market gets to POC and then you see tons of absorption on the bid, right? And sellers are hitting it, it's not cracking. You shouldn't be holding that any longer. I don't care what anyone's risk to reward says. If that's absorbing tons and the market's upticking, and sellers are starting to pull, you no longer want to be short anymore. Do you know what I mean? So just take your lumps and take your 3, 4 ticks and then reevaluate. Because ultimately the market should be dumping. When you're selling, you want to find the path of least resistance to make money. You don't want to just cross your fingers, get a nice big bag of hopium, and pray that a big firm steps in and smashes into the bid. Do you know what I mean? There's not really an edge there. You should be timing it correctly when the order flows in your favor at the key levels, so you can bang it with them. You know what I mean? That should be the way. That's the way I try and look at it anyway. Uh, Sometimes Vader. Sometimes, I mean, ultimately, just mean reversion again. Treasuries are not doing anything. First couple of hours of Globex, it'd be lucky if it moves 3 ticks. I think you can probably get away with like 6:30, maybe 7:30. Nah, probably 6:30 a.m.'s the earliest, the US time. You can probably get away with it. Central time, I believe. But that's probably going to be your best time, to be honest with you. If you're trading Globex, I think if you're trading in like well, for me, it's the middle of the night. Like, this doesn't really happen. If anything, just mean you're just going to be somewhat be reverting. And as you think he said in the Discord as well, you know, the previous days value area high, value area low, and POC is really important because it's either going to hit one of them and then just revert back to mean. Put it this way, it's not going to be like NQ, but it runs 50 ticks. It just doesn't do that. So I think all the day types that you're in AP, I would say, for me, I sort of categorize it into, you have a balance day. So this is regular trading hours. So is this, right? Um, and this you're almost looking at, depending which way you look, you're kind of looking at like a double tiered balance range, right? This is pre-market, and then in the regular trading hours, we've basically accepted up here as the range, right, in the regular trading hours. However, the market's still not doing anything because we're just in Friday's value area. Okay, the market, in order to be super bullish, really needs to break above here and sort of reclaim the sort of 84 to 88 area. And I would say market profile for me, I mainly just use it for context on the specific day. One of the main concepts I use is one time framing. It can be seen here in this day, where when the market is just aggressively bid like this and, consistently every 30-minute period is breaking the next one, I'm not fading that at all. Whereas when you've got a day that is balanced like this, so if I could draw out my sort of curve here, when the market's balanced this way, if we get a break below, like a sweep below this level, or a sweep above this level, I would then be getting, starting to pay attention to fade back into value. Um, and that's pretty much it. That's just how I view it. But it all depends on, are we opening up in value for the regular trading hours? Where are we in yesterday's trading range? Are we opening above it, below it? What's happened in the overnight session? Is the overnight session been net short or net long? Because very typically, if it's one-sided, if the overnight session is really one-sided in one direction, you better believe in the regular trading hours they'll ram it back in their face because it's so little money to move it in pre-market, um, that when it comes to regular trading hours, they can just bang it, you know. And that's typically the way that they normally always do it. I would say from my experience, you're probably talking like 65-70% of the time it will correct a really aggressive overnight session. You're not really getting a lot of the time a gap and go, you know, like the market just goes bids, pre-market opens, then rips. You're normally going to fade back into value a little bit, test the breakout area, then go bid. You know, but all of this is experience, and then it just gives you your general context and ideas for the day, and then you drill down more into the actual volume profile for the session, and then when it comes to your levels to do business, you need to execute that on the depth of market. Take a long time to get proficient with all of that. So Neil, if for prior day's volume profile for that day, very simply, I take that into context with the TPO as well. So where are we? Are we opening up? Is the regular trading hours opening up in yesterday's value area high, value area low? Where are we at in comparison to that, right? No. So if we look at this, we had A period, then B period. I mean, I suppose you could make an argument for this, but ultimately, until the market cracks the overnight high or overnight low, I'm not really seeing anything, to be honest. Because it needs to crack those levels and then one time frame. Because until the market cracks those levels, you could just sweep the overnight high and then revert back into the bell curve, right? You know, and then we've literally just broke out of Friday's value area high on the TPO and then reverted back into the mean, as an example. These are just the key levels you need to be paying attention to, for example. So if we open, Neil, for me, if we open right bang in the middle of value area high and value area low, it's say at POC, that's non-tradable to me. Basically, if there is no, you know, net long or net short on overnight and we've done nothing and we're opening basically where we closed yesterday, I need to wait for the market to do something. That's not tradable to me. But yeah, that's a good point. You're just going to expect some of the same. You need someone to come in and do something before you can react. There's no point of you then thinking I think it's going to go long. You might as well just toss a coin at that rate. I actually ran over a little bit here. It's been guys have been asking good questions, so it's appreciated. Exactly, and the TPO and volume profile are normally they're not bang on, but they're not that far off a lot of the time. Let me know if you guys have got any other questions. If not, we'll probably look to wrap up. Because I need to get some food. Hopefully, you guys have had a good session. It's been good catching up with everyone. Peter, no. No, I track the fading of overnight, but very simply for me, I have two different types for market profile. I basically have if the day is trending, whether it's long or short liquidations, or if it's in balance, pretty much. Yeah, no problem, everyone. It's been good. I'm glad you guys enjoyed it. If you have any questions, feel free to shoot me a message. I'm going to go and grab a bite to eat and I'll take it easy. I'll be on at the same time tomorrow, and let's see. Hopefully, my internet doesn't kick out or my computer doesn't spaz out. That would be great. I'll catch up with everyone. Until then, you guys have a great evening. Stay green, and we'll catch y'all tomorrow. Cheers, everyone.